we are going back to a normal environment. We are going back to the Fed put.
Sorry, can you elaborate normal? What does that mean?
I would say a normal environment is actually where inflation isn't a topic anymore, where the Federal Reserve always has the back of the equity investor of Wall Street, basically. I think this is being celebrated at the moment.
We're back at the Vancouver Resource Investment Conference. Ronald-Peter Stoeferle joins us today. He is the managing partner of Incrementum AG and the author of the famous In Gold We Trust report. If you follow the gold space, which I'm sure you do if you watch my show, you probably would have read his book or one of the editions of your book. It comes out every year.
Yeah.
In Gold We Trust. In Ronnie We Trust. Thanks for being here.
Thank you, David. Thank you.
Let's talk about the latest edition. It's a big book. You talked about everything from the major themes affecting gold to geopolitical risks affecting gold to your outlook to the technical analysis. It's a very comprehensive report. But let's start with the major themes of the economy this year in 2024. I know the 2024 edition is not out yet, but just give us your outlook for 2024, the major macroeconomic themes moving the gold price of this year.
I think that the pivot is in. To be honest, I wouldn't have expected that the Federal Reserve will be able to raise interest rates up to more than 5% and that real rates would actually be surging because we've seen this massive disinflationary move over the last couple of months and the price of gold holding up so tremendously well.
Right.
If you would have told me that real rates would go in that direction, I would have said gold would be trading at 1,600, something like that. So the big question is what happened, and my thesis is that actually central banks, and especially central banks in emerging markets, have put in a floor under the price of gold. If they wouldn't have been here, actually gold would be, according to the old gold playbook, trading significantly lower. Investment demand isn't there. I've talked to many gold dealers. Last year, their turnover was down 75%. Gold ETFs, outflows of 255 tons last year. So it is really the central bank demand that was crucial. Now, going forward, I think that the market, a little bit like a little dog, moved ahead too far, too quickly. And after this very dovish speech by Jay Powell, quickly discounted like seven rate cuts.
Yeah.
The first one in March. I don't think so. I think it's all about the Fed credibility that they have painstakingly rebuilt over the last couple of quarters. And I think they don't want to risk this credibility.
Yes. You know what's interesting? I'll come back to that point. When Jerome Powell at his December press conference signaled rate cuts, as you know, in the following month up until last week, the stock markets have had a big rally, new all-time highs, the S&P 500. Why did the markets take that as good news? Think about it. The Fed would only cut if the economy is not doing well, right? Wouldn't that be bad news for the markets?
I agree, but I think cutting rates is usually being celebrated. But if you have a look at the performance of equities during rate cut cycles, it's actually pretty underwhelming and over the course of recessions. And I think that the market has moved from hard landing to soft landing to no landing. I showed a chart recently where actually the Google search queries for the term recession have totally collapsed. So nobody is seeing a recession anymore. So I think the market is really seeing, we are going back to a normal environment. We are going back to the Fed put.
Sorry, can you elaborate normal? What does that mean?
I would say a normal environment is actually where inflation isn't a topic anymore, where the Federal Reserve always has the back of the equity investor of Wall Street, basically. I think this is being celebrated at the moment.
Okay. Now, you mentioned to me several times in the past that fiscal policy is just as important, if not more so, than monetary policy, especially in today's environment. Explain.
Well, the question is why didn't the US, large parts of Europe move into recession? We know that China is obviously not doing so well at the moment. But the US market clearly stood out. And I think one of the main reasons, and we described it with the term monetary climate change, is that fiscal policy has taken over. We've seen a budget deficit in the United States last year. I think it was like 8% of GDP. We've never seen such a high deficit outside of recessions or major wars over the last 100 years. So I think this is kind of a paradigm change. Um, and it works, yeah. It works like, drowning 5 Red Bulls and 7 espresso. Yeah, it has an effect, yeah. But this effect is kind of fading.
Yeah, well, then you have a heart attack and you die. So that's also oh, is that where we're going? Is that what's happening to the economy?
I don't know.
That sounds like a lot of pain for short-term success, Tony. Um, but I understand. I understand what you're trying to say.
But of course, I mean, we've got an election year coming up in the United States, not only in the United States, yeah, also in my home country, Austria, but people probably don't care too much about that. But also in India, we're seeing it in the European Union. We're having elections. We've seen elections in Taiwan. So it's a big
Is
year.
there a global political movement that you might expect to see change change the political landscape? Is there populism rising? Is there more protectionism, or is there less? Is there more of a desire for global trade? What do you think the people of the world really want right now?
That's a very, very broad question.
Of course, yeah.
I think it's, this polarization is clearly continuing, yeah. And I think that, with the election Trump versus Biden, I mean, that's the best sign for it. I really don't look forward to this election year. It's going to be very, very dirty. I think it's also, let's say that the majority of the world is clearly going into a more protectionist, less free market attitude. There's a few exceptions. Let's see how Argentina, for example, is gonna develop. I'm pretty confident, actually. I think it's very late, but I think it could really become one of the big turnarounds, one of the big success stories. But in general, I just see that. I hope that October 7th wasn't a little bit similar like June 28th, 1914. So really like the tipping point, yeah, where one, conflict, was the beginning of a major war. I don't want to sound too pessimistic, but if we follow what's going on, yeah, I mean, there's so many small conflicts now coming up. Um, that makes me very much concerned.
Are you saying there's heightened geopolitical instability? I bring this up because geopolitical stability or instability important for gold, right?
Yes, clearly. I mean, it's going into the wrong direction. If you want to call it fourth turning or just a major cycle that is now happening from a political point of view. But it also probably has to do with the situation of our monetary system. We're seeing that, for example, in the United States, we are now reaching debt levels that are clearly unsustainable. Since the year 2019, US debt is up 10 trillion. Before COVID, the US paid, I think, 1 billion in interest per day. Now it's 2 billion per day. So those are really significant numbers now. Now, coming from Europe, I have to tell you that the situation, like, that the general mood is very, very pessimistic, very negative. But I also attended a gold conference in Dubai in November, and I have to tell you, I was really excited, yeah, because there's the, this positive attitude, not only when it comes to gold and commodities, but in general, this positive view of the future was really refreshing. And I can just say, when it comes to gold, we're clearly seeing. I don't want to say that the West has lost control of the gold market, but it's crystal clear that the center of the global gold trade is moving, and that's a process, but it's moving from the west to the east.
Do you know what's an interesting chart? I just pulled this up. I'll show it to the audience. The S&P 500 is the orange line. Gold is the bar. Close correlation, not perfect, over the last 12 months.
Yeah.
Are you surprised at this? Do they usually not move in different directions?
No, I would say those correlations, obviously they're not stable. They change. I think over the long term, there's a slightly positive correlation. But I would say, I mean, the major theme since October was end of October was basically okay. Um, 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 Basically risk on, and we've seen that yields came down significantly. We've seen that in equity markets, we've seen that in gold, we've seen it in crypto, obviously. So it was basically one big trade that we saw. And end of October, if there's like positioning from -10 to +10, I would say end of October, we've seen like -8, really, really negative. And at the end of December, we moved to +8. So everybody was super confident. Most people were allocated, made their money, and now it's kind of cooling off. And we're seeing it in the gold space. We're seeing that in the mining space big time. But for some reason, equities still continue to rock and roll. At some point, that's going to change. Somebody just tweeted out that the Mag 7 stocks now have a larger market cap than I think Japan, Canada, and the UK.
Okay, wow. Okay,
That's pretty significant.
Okay, yeah. Okay, that just, yeah, well, Canada, and yeah, we're in Canada right now. That makes sense. We need no hate to my fellow Canadians. We need to beef up our economy. But yes, you're absolutely right. Do you think that there's, I was doing a panel just earlier this morning. Do you think that there was a lot of speculative money that went into perhaps the tech sector? Would that money have gone to perhaps gold or gold mining companies? Do you think that they're competing for the same capital?
I don't think so.
No.
I don't think so. No. I think it's like if you talk to a tech investor and if you talk to a mining investor, that's like a different planet.
Yes, absolutely. Yeah, I can tell. There's no tech investors here at this conference. Everyone's in the suit. That's how you know we're not at a tech conference. Ronnie, tell us about the presentation you made at VRIC.
Yeah.
Very interesting theme.
Well, the leitmotif was Showdown, which was the title of our last In Gold We Trust report. By the way, the new report will be published on 17th of May this year. We're already working on that. So we basically said there are three different showdowns. And at the beginning, I like analogies. I like, it should also be to some degree entertaining. So I started with the world of professional wrestling. I don't know if you follow professional wrestling.
I do not.
I don't really.
Okay.
But I thought it was interesting because in wrestling there's the heel and the face. So there's the good guy and there's the bad guy. But then there's also so-called heel turn. And the most important example for that is The Rock. We know him now as an actor, obviously, as an action movie star, but he used to be a wrestler, and he used to be the bad guy. But he was so super popular, then the audience said, well, actually, he has to be the good guy. And I made this analogy that when it comes to gold as a central bank reserve, we're seeing some sort of a heel turn. So in the 1960s, 1970s, gold as a percentage of central bank reserves was between 70 and 80%. Then we saw the great moderation. Gold became basically a pet rock. Nobody cared about it anymore. The price of gold was coming down. And now we're seeing that this ratio is stabilizing at roughly 20%. And as I've said at the beginning, central banks, especially from emerging markets, are buying gold like crazy. So we might see really that gold is coming back.
Which central banks?
It is Turkey, it is China, India has bought, we're also seeing Singapore, we're seeing in Europe, Hungary, Poland, Czech Republic. So it is really, I would say it's pretty much diversified.
Why more of the Eastern countries? Sorry, I'll let you finish, but why the Eastern countries more than the West?
I think it's primarily because their gold reserves are smaller. Then they're more dependent on the US dollar, so the majority of their reserves is in US dollar terms. And I think that really the tipping point and the reason why 2022 was the year when we've seen new all-time highs in central bank activity was actually the sanctions against Russia. And many countries that are somewhat critical to the US realized, well, actually, with the stroke of a pen, 350, almost 400 billion can be wiped out. So we have to diversify. Um, and of course, what currency or what asset can you use to diversify? It has to be liquid, it has to be traded 24/7, it has to be a sophisticated market, and there shouldn't be too much of a counterparty risk. Now, gold is a pretty good choice, actually. So I think this was a major turning point. So I would say this central bank activity will continue. Last year we've seen, so 2023, we don't have the final numbers yet, but it was above 1,000 tons again. So that's going to be a driver. So my thesis is that gold is slowly but surely really coming back as a central bank asset. And I can tell you, we are focused on the Western world, North America, Europe. But if you go to Shanghai, if you go to Dubai, if you go to Mumbai, it's a completely different attitude.
Two questions about central banks. First of all, do you think that, or are they price sensitive, meaning they buy when they believe value is good?
No, they're not transit. No, no. Central banks are very bureaucratic organizations, yeah. So it takes a while to make decisions, and usually once they've made the decision to buy gold, to increase their reserves, they stick to that plan. So they're not really price sensitive.
So you don't think that they believe $2,000 is cheap? We don't know for sure, but we're just speculating based on their buying patterns and their preferences.
I think they just want to diversify. They want to reduce risks.
So they're not trying to be a hedge fund.
I mean, the Swiss central bank is trying to act like a hedge fund, and they didn't. They did pretty
Second
well.
part of the question: are they preparing for something that requires an additional reserve of gold?
Well,
whatever that something may be.
Everybody's talking about de-dollarization.
Yes.
That's like the big topic. And we're writing in the In Gold We Trust report for, I think, 8 or 9 years. But we always said it's a process. Now, David, I think that the world, the privilege having the world reserve currency, that also means an enormous amount of power, obviously. But I think it's a network good, like language. Like Microsoft Windows, for example. Yeah? It's a network good. So actually, if we would move from the US dollar system to a new monetary system, first of all, it's going to take a while. It's going to be expensive, and the new system has to be significantly better. Right. So let's say, okay, we decide English isn't the global currency anymore. Let's say it's going to be German.
Okay, perfect.
German. What's the chance that we'll sit here like next year and do the interview in German? I think it's pretty low.
Are you saying I can't learn a language in 12 months? Okay, all right. Challenge accepted, Ronnie.
German is a tough language.
I understand. English is a derivative of German, actually, but that's a different topic.
No, but what I wanted to say is it's going to take a while.
I understand.
And therefore, I think that we'll probably see more of a de-euroization than a de-dollarization. I showed one chart recently with the percentage of SWIFT transactions. Yes. Yeah, and it's not Taylor Swift. Yeah, it's the banking network. And actually, the percentage of the dollar is rising, while the percentage of the euro is falling. Renminbi is rising, but it's I think 3.5% at the moment. Yeah.
Yeah, you brought up Taylor Swift. She added $1 billion of GDP to the eastern states on her latest tour. It's incredible. Maybe she's the reason we don't have a recession yet.
David, I've got 3 daughters, and they all want to go to the Taylor Swift concert in Vienna. It's not cheap, yeah.
Yeah.
It's sold out. 3 concerts, all sold out.
It's crazy. But that's another good point. We'll close off on the consumer, and I also want to ask you about Bitcoin. Consumer spending continues to rise. Consumer sentiment is up. Retail sales are strong. It doesn't seem like we're getting a recession yet. Do you agree or disagree?
Um, I have to tell you, we've been in the recession camp early on, and we've been wrong. Um, we underestimated the amount of fiscal stimulus. Um, as discussed, we've got an election year, so the Democrats will try everything to avoid the R word, and the Republicans will try everything to make the economy appear as weak as possible. Um, the indicators that I like and follow, for example, the leading economic indicator is now down, I think, 20 months in a row. Obviously, the yield curve was inverted. I think it was first inverted, was it March 2022? And now it's steepening, and normally the steepening is the sign that we're moving into recession. Um, so I'm still in the recession camp because, it might be anecdotal evidence, but talking to so many business owners from all over the globe, everybody says, well, actually, those interest rates, they really hurt, and there's a time lag. So even if the Fed starts lowering rates, I think we will still see the effects of high interest rates with this time lag. So I'm still in the recession camp, and I think the price of gold is kind of discounting a recession. We in this year's report or last year's report, we actually analyzed how gold is performing in the different stages of a recession. So if I'm right that we're gonna move into a recession, I think gold should do pretty well. Why? Because what happens in a recession, we're seeing fiscal stimulus and we're seeing monetary stimulus.
Bitcoin, I know you follow Bitcoin as well. Let's end here. Do you think Bitcoin will outperform gold this year in 2024?
I mean, we have to talk risk adjusted and volatility adjusted. I think with the ETF, it was, first of all, it was a buy the rumor, sell the news.
Yes.
Everybody was super excited regarding the ETF. But have a look at the homepage of BlackRock. Like on their first page, they're having the Bitcoin ETF. It's BlackRock, it's Invesco, it's Fidelity, it's VanEck, Templeton, all the big guys now have the ETF. And of course, I mean, their marketing departments, they're enormous. And I think this is probably the next stage of Bitcoin growing up. We're gonna see the halving in April, so I'm pretty confident. And we got lots of criticism from the gold camp, but also from the Bitcoin camp, that we have two funds that actually combine gold with Bitcoin. My thing is gold for stability, Bitcoin for convexity, and therefore I think, why not own both monetary assets that are not controlled by a central bank, that are controlled by the market basically, and by code. I just like both, and I'm pretty confident. And there wouldn't be a case for gold and for Bitcoin if we would have like a sound monetary system. But from my point of view, we don't have. So that makes me pretty excited about gold and Bitcoin.
Excellent. Ronnie, thank you very much for coming, and everyone should check out the latest edition that's coming this year, May 19th, you said?
17th.
May 17th is going to be released, the latest edition of the Gold and Gold We Trust report. Thank you very much. Good to see you in person.
Thank you.
And thank you for watching. Don't forget to follow Ronnie in the links down below, and like this video and subscribe.